Good morning and welcome to the Haven Financial Group radio show. I'm Larry Colvig, founder and CEO of the Haven Financial Group. We have Lance Larson with us today, our CPA and tax preparer at Haven. Kim, good to be with you. We got a lot to talk about, and we're going to talk taxes. And first things listeners might wonder is, well, we just got done with tax season, but you really never get done with tax season, which is why I think it's important to start this off the right way.
Well, we want everyone to know this is a positive conversation. When you say taxes, a lot of people go, oh, no. Do we have to talk about that? First off, Lance, I haven't seen you since the actual tax season came to an end. And I'm looking at you. You look no worse for the wear. So you made it through.
Thanks, Kim.
It's good to have you, like always. Well, let's take a look at what we're going to talk about in this show. As Larry has just mentioned, we're going to talk about taxes. It's never too soon to start preparing for next year. And many of you maybe filed extensions, and so October is when you're going to be paying your taxes. And maybe you've got some things that you need to take care of between now and then. Maybe you pay quarterly. So we're going to talk about all of that coming up. We'll also talk about taxes and retirement accounts. It's very important that you understand how those are taxed and what, I know that Lance is going to talk to us about effective ways to pull money from those accounts that you don't end up paying a big chunk of it to Uncle Sam. Then there's taxes and investments in retirement. And finally, we'll talk about estate taxes and how that affects your retirement. So, gentlemen, let's get started with this idea first off about people who maybe have put their taxes off. They've filed for extensions. What are some of the things, Lance, when someone comes to you and says we want to file for an extension? What are some of the things that you talk to them about in doing so?
So, Kim, one of the first things we talk about when looking at an extension is making sure we have the money into the government by April 15th. Mm-hmm. All the extension does is give us more time to actually file the paperwork. We might be missing a document here or there. We might be waiting on a K-1 because we're invested into a publicly traded partnership. Otherwise, you might be going through some family situations that you just don't have time to get your paperwork done. Mm-hmm. Whatever the reason, the extension is there for everybody. One of the things that I use extensions for is when people are coming to see me at the beginning of April, and then I'm just not going to have enough time to do a proper preparation of the return, make sure that I'm crossing all the T's, dotting all the I's. And so I just need to have more time to get that paperwork done. Sure. Even though we filed the extension, the money is still due on April 15th. So you want to make sure that you've done enough work to at least get a ballpark idea that, hey, how much are you going to owe if you're going to owe, or if you're going to get a refund, then you're going to be sitting fine. And then you want to make sure that we get those payments in by April 15th.
Mm-hmm. So once that's taken care of, and people or people maybe who got their filings in before the 15th, no doubt you at this stage of the game begin again with a lot of people. We start the new year fresh, the new year being the 16th of April, moving forward. So what are some of the things that you are really stressing to your clients right now that people need to be aware of as we begin the new tax year?
So one of the big things that we always talk about there is the standard deduction versus itemized deductions. Otherwise, people know it as filing the long form, where we put in all the itemized deductions. In the past years, most people haven't been able to really take advantage of that because the standard deduction has been so high. But this might be the year that we can either do doubling up on charitable contributions, that you might have a bunch of medical expenses that are happening this year. Those are the type of the ideas that we want to look at and say, hey, let's plan for this. And is it going to make sense if you are a charitable person, instead of giving every year the same amount, maybe we prepay our 2026 charitable contributions and pay that in 2025. So we essentially double up there. When we look at medical expenses, the first 7.5% of our adjusted gross income does not count towards our medical expenses. So to give our listeners an idea, that if you had $100,000 of income, the first $7,500 of out-of-pocket medical would not count. That's our 7.5% right there.
Mm-hmm.
Well, if one of the partners has to go have some medical procedures done this year for whatever reason, maybe we look at the other partner and say, hey, this might be a time that we do some of the elective stuff. Hey, this might be the day that we do the cataract surgery. We might want to get LASIK. We might want to get the veneers on our teeth done. Those things that are kind of more elective that, hey, if we're going to have a bunch of medical expenses already, let's start taking care of everything so that we can take advantage of it on our tax return there.
Mm-hmm. Absolutely. Is it too early to know if there will be changes in this next tax year?
Unfortunately, right now it is. We have indications. The Senate has already gone through. They've done a little bit of work and voting there that we're trying to extend the Tax Cuts and Jobs Act, trying to keep the lower tax rates that we have right now. But as of right now, they have nothing solid that has been passed yet.
Okay.
Kim, if I may add, a takeaway from this first segment is if you're listening and you just did your taxes, you weren't happy with the results, you owed a bunch of money, you haven't been doing tax planning, and you really should have been, give us a call. Come on in and visit. You should have a partner that you can lean on for these things to avoid some of the pitfalls that people have every single year. Why not fix the problem so next year you don't have the same problems? Saving money on taxes and retirement isn't just possible. It really is essential to your financial health and your retirement plan. You can reduce, various taxable income, minimize Social Security taxes, avoid some costly Medicare surcharges, which we really haven't even talked much about. Every dollar saved on taxes is a dollar that you keep in your own pocket. And
Right.
For most of us, we work hard for every dollar. Do you really want to give Uncle Sam or the IRS any more than they deserve? Probably not, but we see it all the time. Missed opportunities, unforced errors, because there's no planning throughout the course of the year. We're into May now. This is tax planning season. As Lance has said on our show numerous times, April 1st to the 15th is tax prep time, and planning is throughout the rest of the year. Avoiding these surprises that don't have to happen, but continue to happen if you don't have somebody that's having these discussions throughout the year. It's so very, very important.
Well, Lance, let me ask you, what do you think is one of the biggest mistakes that you see some of your clients make, especially those who maybe walk in and they have not been tax planning?
I would probably say one of the biggest things is not utilizing the full tax bracket that they're in. So as we know that our tax system is a progressive system. Well, what that means is that the first dollar that is being taxed is going to be taxed at 10% on the federal level. It's not until we get to in the $23,000 range that those dollars are then taxed at 12%. Then we go up to about $96,000 this year. And then the next dollars after that are taxed at 22. So everyone's is concerned about, hey, what they're being taxed at. And it's great when we're at 12%. But when you have a room for about $20,000 more to just fill up that 12% tax bracket, well, that means that we could have taken more money out, that we could have done some rebalancing in a portfolio to get some capital gains then. So we don't have to pay in the future. This is where we could have done a Roth conversion. There's all sorts of different ideas depending upon your financial situation and what assets that you have. But at the end of the day, it's still $20,000 that we could have done something with and had either had it taxed at 12% or even at 0% for your capital gains there that we missed out on.
Sure, absolutely. Well, again, and it's understandable why people miss out on this because this is not their area of expertise. This is, however, Lance's area of expertise. And that's why, as Larry just mentioned, if you are now ready for the preparation phase of your taxes for 2025, give them a call at Haven Financial Group. It's 612-504-8400. That's 612-504-8400. Call and tell them you'd like to come in and see Lance. Tell him you heard us here on the radio. And while you're there, be sure that you meet with some of the other experts and make sure that your retirement plan, not just the taxes, but your entire retirement plan is in tip-top shape. All right, when we come back, gentlemen, let's talk a little bit more about taxes and retirement accounts, because obviously all of this ties together. You're listening, everyone, to the Haven Financial Group radio show.